What could happen when the U.S. stock market opens on Monday? Will the rally continue and push the major indexes to new highs, or could investors face an unexpected correction? Right now, Wall Street is closely watching interest rates, economic data, bond yields, and the performance of AI-driven technology stocks. In today's video, we'll break down the key factors that could move the market on Monday, identify the biggest opportunities and risks, and discuss the scenarios every investor should be watching. To understand what may happen on Monday, we first need to look at the current market environment. Over the past several months, U.S. equities have experienced a powerful rally. Technology stocks, especially companies benefiting from the artificial intelligence boom, have led the market higher. Major names like NVIDIA, Microsoft, Amazon, and other AI-related companies have been driving investor optimism. Despite the strong momentum, investors remain focused on one critical question: when will the Federal Reserve begin cutting interest rates? The answer could determine the next major move in the market. The Federal Reserve remains the most important influence on market sentiment. If inflation continues to cool, investors may gain confidence that interest rate cuts are approaching. However, if economic data remains too strong, the Fed could keep rates higher for longer. That creates uncertainty for stocks, particularly high-growth technology companies. As a result, every major economic report is being analyzed carefully by traders and institutional investors. The market's reaction on Monday will largely depend on how investors interpret the future path of interest rates. Let's start with the bullish scenario. If there are no major geopolitical surprises over the weekend and investor sentiment remains positive, the market could open higher on Monday. Technology and AI-related stocks may continue attracting strong buying interest. Companies such as NVIDIA, Microsoft, Amazon, and Broadcom could once again lead the market higher. Under this scenario, investors remain focused on growth opportunities, and the major indexes could move closer to new record highs. A positive market environment would likely support further momentum in the Nasdaq and S&P 500. Another possibility is a mixed trading session. The market could open in positive territory, but struggle to maintain those gains throughout the day. After a strong rally, many investors may decide to lock in profits. This often leads to a pattern where stocks rise during the morning session, but face selling pressure later in the day. In this scenario, indexes may finish flat or only slightly higher, despite an optimistic start. This is a common behavior in markets that have recently experienced strong gains. One of the biggest risks facing the market is economic data. Investors are paying close attention to labor market reports and employment data. If the economy appears too strong, markets may worry that inflation could remain elevated. That would reduce expectations for future interest rate cuts. As a result, bond yields could move higher. Higher bond yields often create pressure on growth stocks, particularly technology companies with high valuations. In that situation, stocks like NVIDIA, Tesla, AMD, and other growth-oriented companies could experience increased volatility. Geopolitical developments remain another important risk factor. Any unexpected escalation in global tensions could drive oil prices higher. Rising oil prices can increase inflation concerns and create additional uncertainty for investors. If inflation expectations rise, the Federal Reserve may become more cautious about lowering interest rates. That combination could negatively impact stock market sentiment and trigger short-term selling pressure. While this scenario is less likely, it remains an important risk that traders are monitoring closely. Several sectors deserve special attention on Monday. Artificial intelligence and semiconductor companies remain at the center of investor interest. Large-cap technology stocks continue to play a major role in determining overall market direction. The energy sector will be sensitive to movements in oil prices. Meanwhile, financial stocks, small-cap companies, and consumer-focused businesses could provide important clues about broader market sentiment. Monitoring these sectors may help investors better understand where institutional money is flowing. Overall, the market outlook for Monday appears cautiously optimistic. The bullish trend remains intact, but investors should continue watching bond yields, economic data, Federal Reserve expectations, and geopolitical developments. A favorable combination of these factors could support another strong trading session. However, any unexpected negative developments could quickly trigger volatility and profit-taking. For now, all eyes remain on Wall Street as investors prepare for another important week in the market. What do you think? Will the U.S. stock market move higher on Monday, or are we due for a correction? Share your thoughts in the comments below. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications for more stock market updates. Thank you for watching.